Let's let's get started. Good morning. Welcome to the first panel of the day. We'll be focused on emerging payments in the developed world. My name is Safwan Zaheer, and I head up digital transformation and payments for Accenture. So we work with clients globally to carve out strategies and work through their product plans and get them executed in the market. As Leon and others mentioned, we are in a truly transformative time in our industry. Particularly, the payments overall is changing in a massive way, payments and commerce. It all started with the proliferation of devices, from smartphones to wearables to watches, new platforms, new technologies like blockchain and a few others that are emerging, to emergence of new players such as Facebook on the rise, Apple, Samsung, and potentially Alibaba. So it's truly an exciting time in the industry. We have distinguished panels. We have an exciting panel today. Howard Hall, who's going to talk to us about the state of the global payments. We'll see if we can do justice in about 10 minutes, I think. And then followed by Thierry, who's going to talk about some practical experiences of Orange in the country around contactless payments, and he'll share some perspective. So without any further ado, I'll invite Howard.
Thank you. I did.
Okay. So I've been reminded that the questions are after the two panels.
Do you know what the name of yours is? I don't see it. Leon. Leon. Howard, it's not there. Sure it's not here?
No, I don't see it. No.
Want to get started while Leon fixes this?
Yeah, so I'll take a moment and just introduce myself. Good morning, everybody. My name is Howard Hall. I'm a managing director with Consult Hyperion. Many of you may know who we are. I presume most of you don't. So I'll try to keep the commercial advert to a minimum because I think it'll lend some context to the discussion we're going to have both as part of this panel and throughout the day. We are a boutique consultancy, almost 30 years old, specializing in nothing but what we more broadly think about as transactions. Our first client was the Bank of England almost 30 years ago, continues to be, along with some of the folks in this room and many throughout the globe. And having said that, I share that with you really for two reasons. One is, despite our modest size, if you will, we have somewhat of a global perspective. And I can say that in earnest because right now we have a project, many of which are related to the themes we're going to discuss today, on every continent on the globe. So as a small firm, we really do have that sort of global understanding and global perspective and hope to share some of those observations with you today. Myself personally, I've been on 3 continents, give or take, in the last 6 weeks, largely, again, talking about things like we're going to talk about today. So I think they just found the presentation. It's reasonably short. I don't think there'll be anything in there that'll surprise you. There's some quantitative information. We'll talk about some industry statistics, some growth trajectories, and then more importantly, I think, some observations that we've seen, and looking forward to hearing some of the things that you learned as well. Was it there the whole time? I'm sorry. It's okay. Okay, how do I advance the slides?
Just
Left click.
Left click.
Yeah.
Okay.
That's right.
Left. Okay. All right, excellent. All right, so we're ready to kick off. So I don't think this first slide will come as any great surprise or any epiphany to anybody in this room. You're talking about a global population that flirts at around 7 billion people on any given day. And you almost have subscriptions on a one-to-one basis in terms of people that have relationships with mobile carriers and in some respect are probably carrying mobile devices or peripherals. Again, it probably will come as no surprise into where the lion's share of that penetration is happening. Certainly in the developed world, as you think about Central and Eastern Europe, Western Europe. And then we're starting to see a great growth trajectory, and I'll share some data with you further in the presentation about some observations and some feedback that we've gotten in some of what you might think of as the more developing world in the more developing markets. So adoption of mobile payments, as we sort of broadly talk about mobile in general, and now we sort of more finely talk about what's happening in the world of payments. About 2 years ago, so this is a little bit of a dated statistic, there were $163 billion made in the world of mobile payments. Now, in the developed world, we classically think of a mobile payment as maybe going into a retailer or buy something online. But the preponderance of those payments are just happening through the simple function of being able to move money between two people, two individuals, a business to an individual, or an individual to an individual. And as you might imagine, that's really taking places, and the leadership of that is happening in places like Africa and Southeast Asia, and to a lesser degree, but certainly with a fairly substantial growth trajectory in places like Latin America. So money transfers, by and large, is leading the way in terms of what we think about as a mobile payment. Merchandise purchases. There's been a lot of activity, a lot of investment, and I would go so far as to say a lot of confusion in the market about what a mobile merchandise purchase is and how it's really going to happen. Is it an in-app purchase? Is it an online purchase? Is it a point-of-sale purchase? All those subtle nuances have varying degrees of technical implications as well as business implications. Bill payments is growing at a fairly substantial rate, and NFC payments. While the promise of NFC and the continuing promise of NFC is highly encouraging, we've seen fits and starts by way of adoption, and we'll talk about what that means in a moment or two. But I think the good news is, no matter how you define a mobile payment, the rate at which they're growing is substantial. At $163 billion, that's by no means a small number. And to see a 35% year-over-year growth on a number of that size and scale is pretty staggering. And that's only combined of about 450 mobile payment users. So it's a fairly small group of people, by virtue of the amount of people that have mobile devices and mobile subscriptions, that are really driving this. But the growth is exciting, and I think will continue to be exciting till 2017 and well beyond. Again, as you think about adoption by region, if you recall a moment ago, we talked about the notion of mobile payments, or what you might think of as peer-to-peer. It probably comes as no surprise that between Africa and Asia-Pac, the lion's share of that is taking place in those regions. You think about something like M-Pesa, which Leon referenced in an earlier slide as we started this discussion. We had the good fortune of being involved in M-Pesa almost since inception. So Safaricom was a client, Vodafone, and so we have some unique insight. It's been reported, and I think this is even more of a modest statistic, that M-Pesa represents about 40% of the Kenyan GDP flowing through M-Pesa. And you're starting to see other platforms worldwide that are starting to replicate, and not quite with the successive scale of M-Pesa quite yet, but there's a lot of promise, a lot of anticipation, and a tremendous amount of growth that we believe will take place within those regions. Obviously, as you get into sort of the more growth regions, you're seeing major purchases from people like MNOs. The card networks have all made substantial investments and are starting to understand this, as have the banks. So just very quickly, and I'm getting the 3-minute warning, so I'm going to move a little more expeditiously. Just very quickly, a couple of the players in the market, most of whom you're all familiar with, and I just tried to take a sampling to give you a different perspective. So PayPal has reported in 2013 of having done about 27 billion in mobile transactions. And as you might imagine, because of their tight integration and their until recently association with eBay, there is a great marketplace for them to be able to facilitate those payments. They also have a very, very strong API offering, and as a result of some recent acquisitions, most notably Paydiant, they're starting to evolve their business and morph into the retail environment as well. While Alibaba does not disclose in their annual report how Alipay represents their revenues, it does claim to be the largest mobile payment provider in the world, with substantially, quote-unquote, greater transaction volume than PayPal. And then just an example of an upstart that has really as a newer entrant in the market, has really made an impact and is growing a business at a fairly substantial rate, is Dawala. And they're trading on the notion of using public rails and value trading on the notion of using public rails and minimizing transaction fees. So what's going to make this successful, right? So there needs to be low cost and low adoption barriers to consumers as well as merchants, so you need to sort of satisfy both sides of that equation. It needs to be simple, it needs to be intuitive, it needs to reduce friction. There's the notion of the acceptance issue, so you need to be able to have some type of platform by where you have, I won't call it universal acceptance, but a broad range of acceptance. And lastly, it needs to be incentive, right? You need to make something sticky. You need to drive engagement. And fill in the blank with what word you want to use. But you need to understand the cultural and social nuances of particular markets in order to do that. Leon shared a story with me while we were in South America a couple of weeks ago about a mobile money provider that's actually selling lottery tickets. Now, there's not a tremendous amount of value or margin in and selling lottery tickets. It's probably a departure from what they intended to do originally, but it drives engagement, it drives people to the application, and it provides awareness about other services and value that can be delivered. So you need to keep these things in mind. So again, moving quickly is because I'm pumping up against my time here. Key obstacles to adoption, it's a pretty smart group of people in the room. I think we could all have a healthy debate on what a wallet is. I don't think there's any universal understanding of what a wallet really means, and there's certainly lack of trust and confusion in the market, even in the developed world. Lack of tangible benefits. There needs to be some type of tangible benefit before you make an investment in, whether it's a POS system, no matter how much cost has been reduced, or somebody even sort of moving to a smartphone or a more intelligent handset. Again, NFC has held the promise of being able to deliver a lot of that. I still think, particularly with the evolution of Apple Pay, that that promise is something that's going to continue to grow. However, there's not quite very well-defined and well-understood standards around NFC, and I think that's been a challenge in terms of driving adoption. Technology typically leads regulatory, so while you have great innovation coming out of large companies, small companies, startups, and kids in garages, it's behind the times, so it takes some time for the market to catch up, or it takes some time for the regulators to catch up. And then I think you can have a very, very healthy debate around ownership. Who owns the transaction? Who owns the data? Who ons the app? Is the carrier? Is the financial institution? Is the merchant? I mean, I think this is a topic that we could talk about for an extended period of time and still not get to a conclusion we could all agree on. So moving really quickly now, because I think I've just passed my time limit. Traditional players in the market have largely been people using public rails like ACH and bank account-based systems, and the card networks. And the card networks are doing some really good things, as are the banks. But as you think about who these platforms are best served to help and to support, in many cases, as we heard earlier, it's the unbanked and the underbanked. And particularly in emerging markets, the brand of a card network or the brand of a bank could almost alienate and hinder adoption versus drive adoption, because there is a level of intimidation and a level of not understanding. You're seeing disintermediation through the merchants, through the marketplaces, and now you're starting to see things like cryptocurrency, which makes money and transactions to send as easy as an email. So likely winners. I don't think there is a likely winner. I think it's going to be an amalgamation of a number of different things. You've seen great growth in the P2P transfer world. With Apple and Google Wallet, through their recent acquisition of SoftCard, you're going to start to see more prominence in the mobile wallet space, and hopefully more people using them and gaining the value that we know that they can deliver. The carriers certainly are going to have a stake in the discussion and have a very relevant place in the discussion, and merchants certainly are starting to drive that as well. So with that, I'll conclude by saying I think it's going to be a really interesting time that we're living in. I think there's probably more confusion. I think there's probably more opportunity, and I think there's probably more enthusiasm around the world of payments than there's probably been in the last 20 years. So thank you for your time, and hand it over to my next speaker.
Thank you, Howard.
Good.
Thank you.
Just open up yours.
So good morning, ladies and gentlemen. Thank you, Leon, for inviting me this morning. I feel very honored. I've been leading this area for Orange in the last 4 years, and I think we have prominent speakers before and after me. And what I wanted basically to do in these 10 minutes this morning is to cover some recent data about market developments, more specifically in Europe. So a few elements to start with. I mean, early in March, we presented for Orange Group our strategy for 2018. And in this presentation, we made it appear that we expect to generate 1 billion euro. Today, our global turnover is around 39 billion. So this is just to scale from new services by 2018, and the mobile financial services with Internet of Things will be one of the two contributors to this revenue growth. And some numbers, so we expect to reach 400 million euros of revenue by 2018, which is 8 times what we achieved last year, around, let's say, mobile financial transaction. And the most significant part of it, it has been introduced this morning in the speech by Howard. I mean, the most important part of it is still the emerging market with mobile money services. And for mobile money, we plan to have 30 million Orange Money customers in 2018. So we have a total base today of 100 million plus telco customers in this area. And currently we have 13. So this is just to scale, let's say, the level of penetration which we plan to achieve with this service. And so mobile money definitely is going to be, let's say, the major driver for this revenue development. We have the privilege in our footprint to be both serving, let's say, underbanked market and also markets like France, which are among the most highly banked in the world. And so we have seen, we are working in 4 different directions. So first one is mobile money for the unbanked. This is a major flow of activity. All this, I think, was introduced very well this morning. We are looking at the evolution of international money flows from the cash-to-cash current propositions to the wallet-to-wallet. We were a pioneer in this. Until now, we have just offered services inside the same central bank zone. So we have not gone in what is really international money transfers, but we have started from Orange wallets to Orange wallet in the West African zone, Senegal, Ivory Coast, Mali, to offer peer-to-peer transfer for our customers. And to be honest, versus Ellie's introduction, we are not there yet into, let's say, futuristic, let's say, optimization of money flows. We are just serving basic, P2P, let's say, use cases from our customers, transferring in average 60 to 70 euros with an activity which is very much concentrated around familial events, helping, let's say, the relatives and friends, and also the religious events. And then we have contactless service. And in the Western, let's say, part, now we moved, we were talking about mobile payment. Now we have decided, and I will explain why, to move to a more extended value proposition on mobile banking, but still, let's say, on a simple mobile banking approach. So these are our propositions up to now. Let's say Orange Money. In the underbanked, we are currently in 13 countries. We are market leader in 7 of them. In Europe, we have, let's say, a pure payment proposition, a stored value account, as it was introduced by Léon in France, and it's being launched in Spain these days. And I'm going to cover more specifically for this morning a project which we launched in October of last year, which was the second in Europe, which is called Orange Finance, which is a simple B2C mobile banking proposition for our customers, built in partnership with a traditional banking actor. So, Poland, okay. So first of all, this was also introduced by Howard. When you look at adoption of mobile payment, you have a lot of, let's say, stress factors. The first one is the deployment of acceptance. The second one is the education of staff at merchants. And it is very clear, and we have experienced that in France, when these factors are not already set up, the experience for the customers can be quite disappointing sometimes, and so you see a lot of enrollment, a lot of customers claiming to enroll, and then the numbers of transactions do not completely follow up. So we have, this is the reason why in Poland, which is the most advanced market in Europe for our perspective for contactless, with the numbers which follow, 60% of POSs are contactless, I mean almost 70% by now. There are 24 million contactless cards in the market, and there are now more than 20% of total payment transactions which are contactless card, mainly card. So we have, there are the only 2 projects in Europe as we know. One is from our competitor T-Mobile, the other one is by us, so Orange, and we have launched mobile banking proposition in partnership with a local bank partner. So this is basically how it works. So we are relying on, let's say, both the bank license and also the back office capability and the know-how and the traditional products. We are not building financial products from the bank. And we provide marketing, brand, sales, distribution, and of course we are addressing our customer base, but not only our customer base. We are also selling this proposition to people who are not our telco customers. So we decided it to be genuinely mobile. So what we can't do through the mobile channel, we don't do. Okay, we are a new player. We want to be a pilot for the future. So you can enroll yourself through mobile. You can also enroll yourself through your shop. But basically, every product which you're gonna get through Orange Finance can be got through mobile. So, for example, we are providing overdraft facilities, so all our customers are pre-scored, and if you are, let's say, asking for overdraft, you will get a yes or no answer, and you will get also the money in, let's say, a minute or two. Okay, we made a very interesting experience, let's say, regarding the adoption of mobile payment in this condition, because operating in this case as a MNO like a bank, we have decided to offer to our new customers in Orange Finance all the traditional means. So they can get from us contactless cards. We even give them NFC stickers, and we also provide pure mobile NFC SIM-centric payment offers. And in this condition, so which I have to insist, this is a long-tail story. We're going to have seminars like this, I think, many years from now. It is the first time that we have one market in Europe where we think really the conditions for success in terms of merchant staff education and POS deployment are there. So we have quite very, let's say, good news to announce. So the first one is, of course, let's say, on a pure choice basis, most customers still prefer to get a card. This is what they are accustomed to. And this is more than 90% of their traditional choice. But what we have seen since this launch is that we are getting, when all these market factors are set up, which is the case, we are getting more transactions per customer for the customers we acquire on mobile and who use mobile payment than we get from the one who use card. Okay, and on the card we have, let's say, usage ratios which are really, let's say, in the benchmark, if not a bit better than the Polish market benchmarks. So this is a very important, let's say, step forward for us in Europe, because as you know, there are mobile payment is not yet to scale, at least for proximity payment. And to some point, let's say, the real appetence of customer and the real feasibility through the previous test was starting to be discussed. So it's very interesting that we have re-evidenced that the customers are ready to adopt, let's say, a short number of them, but if market conditions are there, the usage data is extremely good and better than the card. So this is one vertical experience. Parallel to that, we are still working to enable the bank on the SIM-centric approach. We have also, in France more specifically, a lot of initiatives ongoing, especially around transport. So I think there have been recent announcements. Let's say in transport, we want to do door-to-door mobile ticketing. There is a huge plan for that. Our long-distance railway, as SNCF, has announced 1 year ago and is currently rolling out mobile ticketing throughout its various transport facilities. So now, just two conclusion words, because I see I am out of time, on the directions moving up. So first of all, we believe, and I've seen Bill Gajda is talking after me, so I'm going to be very short of that. So first of all, as MNOs, let's say versus the discussion of 2-3 years before on NFC SIM-centric, we are completely convinced that, let's say, we need to have, let's say, mutualized approach. In Europe, which is a very fragmented market, the approach with individual approach, bank per bank, MNO per MNO, this is leading to a much too fragmented ecosystem for what is payment, which is a global scale and also a cultural issue and a long-term issue. And we will evolve toward tokenization. We are convinced this is the must-have. And now, for us, I think three keywords. The first one is simplification. Okay, everything we have learned about this, including the story for mobile money, where we now, let's say, we reached for around 25 million transactions for the month of December 2014, 8 years after launching the first mobile money service in Ivory Coast. So even if it's now a huge success in the world with more than 100 million active users of mobile money. We have seen that first, it's a long tail story, and second, it is extremely dependent on, let's say, the quality of user experience, how simple you get it. And this is, by the way, why we have to go all this way, and it will take several more years to introduce mobile payment in developing countries. So simplification is the key. The second point is we need to scale up merchant partnership. I think whilst we are working, the consumer expectation is evolving. I made some points about adoption in Poland. I think it's very important in Poland. In what we offer, we have partnership with 160 merchants in Poland, and our customers are getting, on an opt-in basis, they are getting personalized and, let's say, contextual offers from the merchants they go to. So this is not just, let's say, the mobile substituting the card. We think there will be little value in just doing this dematerialization business. When people go to the digital world, they expect the digital world reinvent the business rules, and also consumers expect different proposition. So this has to go with merchants. It's also very important for the economy of payment in Europe, where the interchange is quite low, and so there are very little business outlooks if you are purely focused on the payment business. And so more globally, and I introduced that through our experience in Poland, we see that we need to go to a broader value proposition to the customer. So this is why we are going to simple forms of banking. We will not stick to just, tapping with the phone, or let's say enabling bank card payments. We are moving to, let's say, trying to simplify the day-to-day life of our customers in a cashless society. Thank you very much.
Thank you, Thierry. And it seems like Orange has had some good success in rolling out these services, so feel free to import it to the US. We need some of these services. We're on to the Q&A piece. So, Leon, do we have 10 minutes or 15 minutes? So, 10 minutes. So I see a hand here. If you don't mind introducing yourself and your affiliation, I'm just sending you there.
Thank you. Thank you both. Howard, a question. Your drivers to success, I'm Richard Field. Your drivers to success slide noticeably didn't mention security or guarantees that you're not going to lose your money. And then other issues like privacy. Are those issues on your mind, or are they not as important?
I think they're actually extraordinarily important. I think the purview, the lens that the slide was meant to present through. Hi, thanks, Richard. That was a particularly good question, particularly because our firm is very security-minded in terms of a lot of the projects we work on. The lens under which the slide was presented was sort of more through the merchant lens, and particularly maybe even the consumer lens. And I think when you impart trust and you start adopting these things, there's the implication, or it's certainly implied, that the security will be addressed. But as these technologies come to market, as they become more widely deployed, security is going to be a constant theme and a requirement that's going to be critical, absolutely paramount to widespread adoption, because I think the first breach, the first trust issue could really hinder that. So your question's spot on, and it's right. And in the context I was presenting the slide, I probably may presume that that was something that was well understood and maybe didn't go into the level of detail that I should have.
This is for Monsieur Millet, Kalba International. In Africa, at least, many of the people using mobile money have multiple mobile money subscriptions, just as they have multiple SIM cards. And so my question to you is, you mentioned kind of the level of transactions that the mobile money people are using. I think this was the Polish example versus the card people. When the market evolves and every mobile operator is providing mobile money, Does the level of transactions go up because it shows the ecosystem is growing, or does it go down because people are using 2 or 3 mobile money services and splitting their transactions across more than one operator?
If you don't mind, go ahead.
Thank you for this question. So, two answers. So first of all, so we have had the volume of our transaction in these last 4 years for mobile money has grown by more than 100 factor. Okay. When you look at the average transaction value, it has not moved. It is quite stable. It's varying maybe 2%, 3% per year, but there is nothing noticeable. And in fact, it is quite country specific. Regarding the multiplicity of, let's say, use per customers, in fact, in most of the African countries where we operate, even for the SIMs, there are now identification requests. So the number of SIMs you can own is also limited. Operators have to control that. And for mobile money, it's the same. So in some countries, you have to fill in a KYC, which is controlled. And you might be able not to use only one mobile money account. In some countries, you are enabled to get several, but in any case, there is a threshold of the value of transaction and the money you can store off your account, which is part of the regulation. And our platform, of course, have the capabilities to check that, let's say, these thresholds are being, respected, even if the usage is split on several accounts.
Question here, right? If you don't mind stating your name as well as your affiliation, that would be great.
Thank you. Hi, Kate Cronin, Citigroup. So my question for Thierry is, you referred to your third-party partnerships with banks in supporting your mobile payments for Orange. What's the nature of the partnerships with the banks, and what are you relying on them to do, and are they branded in those partnerships?
So, first of all, I think at Orange we believe in partnership. I think it's a very important statement. We are a large organization, but we have learned, let's say, from our story in Europe, where we operate in fragmented market, that when you just want to go on your own, especially in revolutions, it's not the right approach. So we are really, and sometime, I was told this, let's say, 2 weeks ago, and it's a very simple statement. If you take, both the financial world and the mobile world, they come from, let's say, interoperable approach. So for us, there is no reason why when you go into, mobile financial in the future, the merger of these two worlds, which have been operated interoperable by construction, you should go on with, let's say, a closed loop and, let's say, a single actor approach. And for sure, for a MNO like us, it's not relevant. Then the partnerships, to be honest, they depend on, with this, let's say, open attitude, the partnerships are very different. In Poland, you see we have a partnership which is quite strong because in the end, the bank has the ownership of the base, okay? So we are doing a sort of virtual JV, and so the role of the bank, let's say, in the value chain is more important than ours. In mobile money, we are, let's say, owning the customer base, so we work with the bank on some other aspects. So for example, we can work on B2B partnership. We can also distribute their financial product to the customer base we acquire on the mobile money. And we have also some regulatory, let's say, linked cooperation, for example, for meeting the compliance requirements. So it's varying. I think it's varying in the footprint, and to be honest, it will also vary in the years to come.
Thank you. The lady over there.
Thank you. Kate McKee from CGAP. We work on financial inclusion. And I have a question, I think, particularly to Mr. Millet, but also might be relevant to you, Mr. Hall, which is, what do you see as the main barriers to customer adoption, and particularly activity in the move from P2P to a wider range of services and from OTC to wallets? in developing countries?
I think in developing countries, we have to be in a straightforward and honest answer. When you compare Europe versus Africa, the big difference is that in the last 20 years in the developing countries, the banks and also the schemes have built, let's say, around the card, a level of, let's say, services and also experience for the customers, which is quite good. So the transition to mobile will take time. Okay, this is a big difference with Africa, where we were addressing people who were completely unbanked, and the only alternative was for cash. And I think everywhere in the world we see a push to cashless. Okay, both from authorities, actors. I say there are a lot of values and drivers for this to happen. The second point I would say in developed countries is that I've commented that before, but if you look at payment, now the commission on merchant transactions, the interchange is around 0.2, 0.3. The markets are fragmented, so it's not such a profitable industry as it used to be. And the financial services versus telco, we have learned that it's also more of a push industry. You have to push your services to the market, much more than in telco, where people really, let's say, it has become absolutely mandatory in our life. And even if there is a strong competition, I mean, the level of attraction for the consumers, basically, when you are MNO, you have to make sure that whenever they come to a shop to buy their subscription, they're going to come to yours. I have seen that in most financial services, the level to push some products that people wouldn't buy is much more important. So we have an equation there, I think, with the banks, because the card infrastructure has been built over years. It's quite serving. The market dynamics are not there. It has become, let's say, less profitable, payment by itself. And this transition should need to be pushed. So in fact, there are only, let's say, actors with somehow disruptive plan or a specific agenda, which, in my opinion, can help agilize this in the years to come. And to some point, this is what we are trying to do, and that's what we want to be.
Well, unfortunately, we're out of time. So I would encourage all of you to interact with the speakers over networking and coffee breaks. Thank you very much for the engagement. And if I may request all of you for a round of applause to our speakers. Thank you.